So you found it. The perfect house with that big backyard for the dog, or maybe it's the exact car you've been wanting forever. You can practically see yourself living that life. You fill out the loan application, feeling pretty good about it. And then, the rejection email hits your inbox. The reason? A 560 credit score. It feels like a door slamming in your face. And yeah, it's incredibly frustrating. But I want you to know it's not random. Lenders aren't just picking a number out of a hat. A 560 score sets off specific kind of hidden alarms in their system. In this video, I'm going to show you exactly what those alarms are, and more importantly, how you can shut them off so you can finally get that yes. All right, let's get right to it. When a lender's computer sees a 560 credit score, it triggers immediate red flags. Here are the 3 biggest reasons it almost always leads to a denial. Lenders run on rules and risk. For most of them, a 560 score is just flat out below their minimum, especially for the best loans. Take conventional mortgages, the most common home loans out there. The huge majority of lenders require a minimum credit score of 620 just to get your foot in the door. With a 560, your application is often automatically kicked out by the software before a person ever even sees it. Even for programs that are supposed to be more flexible, there are still lines. While the FHA home loan program is a great option, many lenders have their own internal rules, often requiring at least a 580 score. Your 560 score tells them a story of past financial trouble, and in their world, that makes you a high-risk borrower. It isn't personal, it's just business. A low credit score usually doesn't happen in a bubble. It's often a sign of other financial issues, and a big one is your debt-to-income ratio, or DTI. That's just the percentage of your total monthly income that's already going toward debt payments. Lenders look at this number very closely. While a 560 score doesn't automatically mean your DTI is high, the two often go hand in hand. To a lender, that low score is a major red flag that you might be overextended. Even if you somehow met the minimum score, a high DTI, where maybe 45 to 50% of your income is already gone before you even pay for groceries, tells them you have very little wiggle room to handle a new loan. That makes you a huge risk for default. Let's be real about interest rates. If you do find a lender for an auto loan with a 560 score, the rate they offer you is going to be brutal. We're not talking a couple of points higher. For a used car, people in the subprime category, which is where a 560 score lands, can see average interest rates hitting 19% or even more. This turns what seems like an affordable car into a massive financial anchor over time. For a house, a low score means paying way more in mortgage insurance, which can add hundreds of dollars to your monthly payment and make the home completely unaffordable. Lenders see this ugly math and know the chances of you struggling with those inflated payments are much, much higher, so they just say no from the get-go. Okay, so those are the whys behind the rejection. But like I said, this is not a dead end. Let's talk about the solution. Here's a real, actionable plan to turn this around. Forget conventional loans with a 560 score. For now, they're not an option. Your entire world should be the FHA loan program. The rules here are crystal clear. With a score between 560 and 579, you can still be approved, but you're looking at a 10% down payment. So, you have a 2-part mission. First, get aggressive about saving for that 10% down payment. Second, and this is key, do everything you can to get your score over 580. The second you hit that 580 mark, the down payment requirement for many lenders drops all the way to 3.5%. That 20-point jump is the single most important financial goal you can have if you want to buy a home. Getting a car loan is definitely possible, but you have to be strategic. Don't just walk onto a random car lot and let them blast your credit out to a dozen different places. Instead, look for lenders that let you get pre-qualified online with a soft credit check, which doesn't hurt your score. Be ready for those high interest rates we talked about. Your best weapon against them is a big down payment. The more cash you bring to the table, the less risky you look. It might mean getting a reliable, more affordable used car for now instead of your dream machine, but it gets you on the road without taking on a crippling amount of debt. This right here is the most important long-term fix. Your odds of getting a normal, unsecured credit card are slim to none. The tool for you is a secured credit card. It's really simple. You give the bank a security deposit, usually a couple $100, and that deposit becomes your credit limit. Get one secured card. Use it for one small recurring bill, like a streaming service or your phone bill. Then pay it off in full and on time every single month without fail. This starts building a fresh, positive payment history on your credit report, and that's the number one thing that will pull your score up over time. So let's recap. A 560 score gets rejected because it signals risk to lenders. It often points to underlying debt issues, and it leads to loan terms that are dangerous for everyone involved. But you have a clear path forward. For a house, you need to become an FHA loan expert and push for that 580 score. For a car, be strategic, be ready for high rates, and let a down payment be your superpower. And for your overall financial health, the secured card is your new best friend.